It's Monday morning, and the tone across markets feels different, not euphoric, but lighter. After weeks of tension around trade war fears and yield spikes, there's finally a sense that we may be entering a stabilizing phase. The most important shift came not from an earnings report or a data release, but from a few key voices over the weekend that together painted a picture of recovery and resilience, and Opendoor, once again, found itself at the center of that story. Let's start with the macro picture. Long-term yields have begun to fall, easing the pressure that's been squeezing growth and real estate stocks. That's a big deal. When yields rise, affordability drops, mortgage demand slows, and housing-related names like Opendoor tend to suffer disproportionately. But when yields ease, even modestly, it changes the narrative. It hints that the Federal Reserve may not need to tighten further, that inflation expectations are contained, and that the cost of capital could start to normalize. It's not just a number on a screen, it's a signal that confidence might be returning. Then came Donald Trump's weekend post on Truth Social, where he said the fears around China were overblown and that the United States wanted to work with China to avoid a depression there. It was a rare moment of calm from someone whose words often stoke volatility, and it threw cold water on the trade war panic that had defined much of last week. Whether you support Trump or not, markets listen to him. His comments have weight, especially when they counter a prevailing fear narrative. In this case, that one post could prove to be an emotional turning point, a reset that brings buyers back into beaten-down sectors like housing, tech, and real estate innovation. And that brings us to Opendoor. The stock closed last week just above $7.50 after a series of tough sessions that had more to do with macro sentiment than company performance. But over the weekend, something interesting happened. Investors started talking about Opendoor again, not as a meme stock or a speculative bet, but as a serious company going through a structural rebuild. One of those voices was Mike Alfred. For those who may not know him, Mike Alfred isn't your typical online commentator. He's an experienced investor and fintech entrepreneur, the co-founder of Brightscope and Digital Assets Data, both of which were acquired by major financial players. He's also a long-term Bitcoin investor and one of the few voices who bridges the gap between traditional finance and digital assets. Alfred has built a reputation for cutting through noise and focusing on fundamentals. So, when he posted that if long-term yields keep falling and Opendoor drops another 10 to 25%, he might take a position, people noticed. He didn't say it as hype or speculation. He said it as someone who's watched the company's evolution and recognizes a potential inflection point. He wrote that he likes Eric Jackson's advocacy, he likes the energy and focus of the new chairman, and that he's long believed the real estate buying process in America needs to be remade. That's not retail chatter, that's institutional curiosity. It's the kind of comment that often precedes new money entering a story that's been written off by the mainstream. And when you pair Alfred's post with Trump's message, and then add what Kaz Nejatian posted on Sunday morning, you start to see a clear theme emerging: builders keep building. Kaz, who has quickly become one of the most vocal and inspiring CEOs in tech, shared a quiet but powerful reflection. He said that the reading in church that morning came from Jeremiah chapter 29, verses 4 through 7, where Jeremiah tells the exiles to build houses and settle down, to plant gardens and seek the prosperity of the city in which they live. Kaz added, "I felt micro-targeted." It was a light-hearted post, but one layered with meaning. In the context of Opendoor's mission, to simplify and democratize the home buying process, that verse carries a deep symbolism. It's about creation during uncertainty. It's about the act of building even when the world feels unsettled. That's exactly what Opendoor has been doing. While the market has focused on short-term volatility, Kaz and his team have been executing on long-term vision. They've been cutting redundant costs, using AI tools to consolidate from 10 external software providers to one, saving millions annually. They've been strengthening governance after settling shareholder claims and bringing sharper oversight to operations. They've been realigning internal structure under Keith Rabois' tough but necessary lens of efficiency. And they've been expanding the innovation pipeline, preparing to accept Bitcoin and crypto for home purchases, something that connects the company not just to real estate, but to the future of digital finance. This is what real building looks like. When markets panic, real builders stay focused. When the noise peaks, they go quiet and execute. And that's what Opendoor has done since Kaz took the reins. If you look at the last few months, the company's fundamentals have strengthened while sentiment has deteriorated. That disconnect rarely lasts forever. It's the same pattern we've seen before, in Palantir, in Carvana, even in Tesla during its early transformation years. For months, those companies were called overvalued or broken, only to surge later once execution aligned with narrative. That's the opportunity forming here. The macro environment is finally easing, the market is showing signs of stabilization, and Opendoor is quietly operating with more clarity and focus than ever. The company's next major catalyst is its Q3 earnings on November 6th, where investors will be watching for three things: sustained profitability on an adjusted basis, continued cost efficiency, and transaction volume stabilization. Each of those metrics matters. But the real story is the culture shift underneath, a leadership team that's building a company meant to endure. Rabois has been transparent about the need to rebalance the workforce and trim inefficiencies. He's not saying that out of weakness, but conviction. It's the same playbook he helped refine at Square and Opendoor's earliest days: focus, simplify, and scale only what works. Meanwhile, Kaz has made clear that he's not building for the next quarter, he's building for the next decade. His vision of an AI-first housing marketplace isn't about chasing headlines, it's about creating a real system that learns, adapts, and scales. So, when you combine all of that, the falling yields, the calming of trade war rhetoric, the growing interest from credible investors like Alfred, and the quiet symbolism of Kaz's Build Houses message, you get something powerful: a narrative reset. Markets move not only on numbers but on belief. When belief starts to shift, price eventually follows. Now, let's talk about what to watch heading into Monday's session. First, keep an eye on the 10-year Treasury yield. If it continues to soften, that's your green light for growth and housing names to regain footing. Second, look for early strength in the broader market futures, particularly in the Nasdaq and real estate sectors. If we see that, it confirms that the macro tone is improving. Third, monitor Opendoor's volume. In recent weeks, volume has been subdued, which is typical during consolidation. But a spike in volume on a green open could indicate accumulation. It means investors aren't just watching, they're acting. And fourth, keep an eye on social and institutional signals. Kaz's posts have become a real-time reflection of leadership intent, and Eric Jackson's continued campaign has given retail investors a consistent rallying point. If either of them posts an update on Monday morning, it could serve as a soft catalyst. The goal for Opendoor right now isn't to surge overnight, it's to hold its base, rebuild sentiment, and climb methodically into earnings. If we get even a modest rebound this week, it could set the stage for a broader recovery into November. Remember, every major turnaround starts quietly. Before Palantir ran from $8 to the triple digits during the AI boom, it spent nearly a year trading flat while the foundation was being rebuilt. That's the phase Opendoor is in right now, the foundation phase. Investors who recognize that tend to be the ones who benefit most when the breakout finally comes. So as we head into this new week, the message is simple: the noise may fade, but the builders keep building. Kaz's church post wasn't just a verse, it was a reflection of the mindset guiding this company. Even in uncertainty, keep building. Even when sentiment is against you, keep moving forward. Because creation, innovation, and discipline always outlast panic. Trump's tone has shifted. Yields are easing. Smart investors are starting to look again. And inside Opendoor, the focus remains clear: streamline, strengthen, and stay ready. Monday isn't guaranteed to be explosive, but it could be pivotal, the first sign of sentiment turning after weeks of fear. And if that happens, it won't be a coincidence. It'll be the market catching up to what builders have known all along, that conviction, patience, and execution are what win in the end. So as the bell rings this morning, keep perspective. Markets move in cycles, narratives rise and fall, but value and vision endure. Opendoor has both. And if history has taught us anything, it's that the quiet conviction phase always comes before the comeback.